This is price action analysis for the 19th of January 2023 for Bank Nifty. So before I begin with the analysis, this is a quick glimpse from yesterday's prediction video. Please have a look. Now, this particular move up is part of the first leg up. How do you know? Because it tested this particular low, this double bottom shot past this particular low. So that's the end of the down move, and this is the first leg of the up move. Tomorrow you can either encounter a small gap up and then a sell down. Do not get carried away by that. The sell down that you will see tomorrow is most probably going to be a pullback of today's move up. This move up can continue above this particular level. Once this is tested, you'll have a strong pullback down. You do not need to be bearish. You can look for scalps. Once the move down is over, the second leg of this would follow up. Right. So I was pretty certain that this was the first leg and you'd have a pullback and then you would have the second leg. There were many YouTubers, there are many people, especially on Telegram, who were saying that things are very bearish. They were citing US Feds and the current technical pattern analysis, and everyone was looking and suggesting trades towards the sell side today. I had predicted the move to be from here till here, but then the first leg had ended here. So that gave us a measured move of 443 points instead of 530. 530 was considered with this stop. But the moment this happened, I had updated on the comment section of the channel that it is 440 or 430 and not 530. And you can see this is an approximate up move from the pullback. Right? So this shows with great amount of accuracy what was predicted. In the beginning, when the morning started, you had a huge bear candle, and again people based on what was told to them on YouTube and on Telegram, everybody was thinking, hey, it's another bearish day, this is a top formation, now it's going to come here. Alright, it's going to come here because this particular extreme has not been tested. This particular extreme on the 26th December has not been tested, because this is a huge fall down, if you could see, and this is a very lame test of this. So I suspect that there would be a test of this till we get a huge bullish momentum up. Okay, so yeah, it will fall down, but not now, because right now we're just looking at patterns for a day trader, which are short patterns, and that pattern suggested that we would finish the move up here. Now for tomorrow, tomorrow's price action analysis, it is a bit confusing for me, to be honest. So now when you say that the leg up is over here, right, there's no bearish strength that you could see. Now once this leg down was over here, you could see very good bullish strength up, right? So this started yesterday and you had strength up. Now when the bullish leg is over, you're not able to see bearish strength. There were a lot of people taking bearish positions even here, thinking that it's going to crash. But then the market is pretty sensible, because all the institutions need to do is not to place an order. Right? So in case the orders dry up, all that would be left is you and your stop orders, your stop loss orders. So in case you are smart enough to place a stop, a sell order here, right, and then the market executes your order and the market comes down, and there are no institutional orders to take it further, there's no momentum, your stop loss order would be somewhere here. Now you'd say this is a head and shoulders pattern, so this is a valid trade. True, it is a valid trade. But what happens if there are millions of idiots doing the same thing, placing sale orders here along with a buy order, which is a stop loss order here, and when there is no one to take the market down, what happens? The market comes back to take your stop loss, and then you think that it is the institutions manipulating. That is not the case. That is just markets being void of any orders, there's no liquidity because there are no institutions putting their hands in, and then these kind of sideways movements happen. So again, now coming for tomorrow, like I said, it's slightly confusing because you're seeing a sideways move, you're not seeing a bearish move, so which leads you to believe that this could again be part of a bigger leg up. So how many up legs can we have? That's the confusing part, because we've had good leg down. Now if you see, right, now see, this is like huge speculative territory, especially for people who are new to this kind of trading. I'm sorry. So if you consider this to be a huge leg up, you're looking at a huge leg up from here to here, right? So which overshoots this and this. But is that the case? We can never really tell, because leg counting is something that I think the best of us in the market are finding it difficult, because every leg has smaller legs, every small leg has even smaller legs. It depends on the time frame that you're looking at. So in case this is the case, because this is a huge leg up, this is 973 points from the 12th of Jan up. So in case this is the case, then if you're looking at a measured move from here, you should be bullish till this particular part. But I wouldn't want any of us to bet on that, because that could come any time. That could even come by the end of Jan, and we are day traders, so I don't know if that would be the wisest thing to do. So the next best thing that I did was to go and I saw the 1 hour charts. Now in the 1 hour charts, you could see that this is, if you consider this to be the first leg up, that is 690 points from the 17th of Jan, that is yesterday. You can have a measured move up to the yellow line that I marked, which is 43,063, right? Now let's consider this to be a near target. Okay, now if we are considering that to be a near target, that works in two particular ways. One is that you can see a bullish trend line here, and this is a bullish trend channel line. Now in case that target is achieved and then this trend channel line is overshot, you could have a very good move down. So you could take aggressive shorts at this particular level, at the yellow level. Now the yellow level also has one other indication. Now say you're not getting that particular move down, you could probably, in case you're getting sideways market, which is frustrating for the coming few days, just take a note of this wedge pattern which is being formed from here. So this is 1 push up, 2 push up, and if the third push up is somewhere here, right, or here, this could be a test of the extreme here, which we had not considered till now. So this I've marked it with a blue line. So in case you are able to have a third push up maybe in the coming week, then you could again bet on very aggressive move down. But how feasible that is, I don't know, only time can say. But as a day trader, I think for tomorrow the quick outlook should be that we should be looking to buy till the yellow line, not looking to sell. I'm not saying that you buy at every dip. That would be absolutely wrong, because if it's a sideways market, if you buy at every dip, you're an idiot. So don't buy at every dip. Look at proper price action patterns that are being formed for you to buy, and then place a buy order. Otherwise, do not place a buy order. But till this particular yellow line, don't think of selling aggressively apart from small scalps that you want to take. Once this yellow line is reached or breached, or once this trend channel line is reached, and especially if it is breached, you can look at aggressive shorts. So this is pretty much it for the 19th of Jan. I hope you guys find this helpful, and I hope that it helps you make some money. And if you like the content here, please remember to leave a comment at least, even if you don't want to subscribe. It's really motivating for me to see people actually looking at it, benefiting and commenting. Even if you have trolls, I'm okay right now even to be trolled. So if you want to put some wise ass snarky comments, go ahead and do it. I'll see you then tomorrow.